So that's with regards to our watch list. But Sharad, over to you. In terms of the rapid fire.
Well, yes, we are joined in by Nilesh Jain. Good afternoon, Nilesh. It's always a pleasure to have you. We'll start our rapid fire. Of course, Shipping Corporation and GE Shipping make it to my list. There are a lot of volatility in the global markets. Is there any chance of good further up move in these counters, or do you think they will still stay in that consolidation range?
Very good afternoon to you, Sharad. Well, absolutely a very strong run-up that we have seen in both the counters. So structures still look strong. As far as SCI is concerned, Shipping Corporation of India, I think it is likely to move towards 365 to 370 in the near term. Keeping a stop loss below 325, buy and decline should be the strategy. And similarly, GE Shipping, we have already seen a spurt of over 10%. So not advisable to chase the momentum at current level because the risk and reward is not looking favorable. Better strategy would be to wait for some meaningful decline. Then probably it can be added for a short-term play towards 1720 to 1750.
Right, not going a bit farther from ships. I'm just talking about a shipyard company, and that is Cochin Shipyard. Your views on it? Any alpha can be made here? Of course, we are seeing some numbers impact also coming in. But anything on the charts which is looking attractive here?
Well, Cochin Shipyard, in fact, has been under pressure since a long time. So not advisable to take any contraband because the structure still appears on a negative side from a short-term perspective. It is trading below its 200-day moving average as well. So as long as it trades below 1600, the structure appears on a weaker side for 1450 to 1400 on the lower side. So avoid taking any contraband at current level.
Right, and any trade being made for Hind Copper?
Well, see, we have seen a sharp correction in the copper prices, but the numbers were good in Hindustan Copper. So comparatively, the structure is looking better. And if at all you get any dip towards 570, that can be used as a buying opportunity. Keeping a stop loss below 540, we can expect a gradual uptick towards 590 to 600 once again in this particular counter.
Right, and your views on Alembic Pharma? We have seen a little bit of defensive buying sometime in the small cap pharma names, but especially for Alembic Pharma, any views here?
Well, as far as pharma is concerned, you have better options available. Alembic Pharma at current level is not looking that promising. We have seen some bit of short-term structure disruption. So we may see a follow-up on the lower side to continue towards 700 to 690. So as of now, it's an avoid. But yes, you have better options like Biocon, DVs, granules within the pharma pack that can be looked at. But APL is an avoid.
On infra, further fall you can expect. The stock is down after the cancellation of order announcement was come in, and of course the company came out with its exchange filing and they said that overall their railway orders is still there. But do you think any further fall is there in this counter, and if yes, stop losses?
Well, quite possible that we may see follow-up on the lower side to continue. If at all it breaks 307, so that's the immediate support of 50 DMA. If that is taken off on the lower side, then the target on the lower side could extend towards 280, 260. So 280 to 260 can be seen if it breaks below 307. And on the upside, if it takes out 325, then there could be possibility of some bit of a pullback.
Right, and a weaker set of numbers from Power Grid. Do you think a little bit more fall is there, or it's going to come back to this consolidation phase?
Good part is that it is still trading above its 200 and 100-day moving average. So quite possible that we may see stock taking support somewhere around 285. And some bit of consolidation is something that we can expect. I'm not expecting any V-shape kind of recovery. But yes, in the range of 285 to 300, that's the short-term trading range we can expect counter to oscillate. But the broader structure looks sideways.
And how the positional setup looks like for KEC International?
Well, KEC positionally, the structure is looking extremely weak, kind of a sell-on-rise structure. We have seen a continuation of a lower top and lower bottom formation as well. So looks like it is heading towards 470 to 450 on the lower side. And avoid taking any contraband because the short-term structure looks weak.
Well, of course, that's the end of the rapid fire segment, but Hiral has a list of Google trending stocks. What is the Hiral?
Let's quickly pull up what's trending. I'm sure it's a lot more than we are anticipating today, because the kind of markets that we are in, Amber Enterprises, Keynes Technologies, both of them, because Keynes was beaten down last week and Amber, which has joined the list. Godfrey Phillips on the back of numbers, Delivery also on the back of numbers, and you have a Bharat Forge, which is in focus. Anything that you like on the charts from these counters?
Hiral, in fact, whatever list that you have just mentioned, all the stocks are looking on a negative side. First of all, EMS space, Keynes, Ember, both the counters have a weak setup. And if you see delivery, where we have seen a big crack today, so that particular counter is also looking weak on the chart. Quite possible that Bharat Forge may find some support near about 1830, 1820 zone, but still there is some more room left on the lower side. But yes, if it falls in the range of 1820 to 1800, that can be a good entry point. Because we have already seen a very good run up. This looks like merely a profit taking or retracement. So Bharat Forge could be one particular counter that can be looked at on declines. But apart from that, all the other stocks are looking on a weaker side.
Okay. Bharat Forge, that's the only one. The others are all yes in a weak setup today. Thank you so much for joining in. Always a pleasure, Nilesh, to speak to you as well. But moving